first half of 2026 had just about everything in the stock market: panic, record rallies, and historic volatility. Here are 4 stats that explained what happened. Let's start with the S&P 500. After stumbling earlier this year, the index came roaring back in the second quarter. The S&P 500 gained 15% in the second quarter, its best quarterly performance since 2020, hitting a series of record highs along the way. Next up, the NASDAQ 100. AI enthusiasm came roaring back after investors worried the trade was losing steam. The NASDAQ 100 surged 28% in the second quarter, also its strongest quarter since 2020, as investors piled back into tech's biggest names. But no major index outperformed semiconductors. Chip stocks absolutely exploded higher. The Philadelphia Semiconductor Index, better known as the SOX, jumped 88% in the second quarter, the biggest quarterly gain in the index's history, fueled by relentless demand for AI chips. Finally, it wasn't just the Magnificent Seven that carried the market. Smaller companies got in on the rally too. The Russell 2000 index of small cap stocks climbed 21% in the first half, marking its strongest start to a year since 1991. It offered a sign that the rally is broadening beyond mega cap tech. But that doesn't mean the ride was easy. Investors navigated tariff fears, geopolitical tensions, and some late quarter weakness in parts of the AI trade. Now the focus shifts to what's next: earnings season, the Federal Reserve, and whether corporate profits can justify the market's massive rebound. If the first half of 2026 is any indication, investors should probably buckle up. The second half could be just as wild. Read more about the stock market and its future on Business Insider.